Yesterday, the stock market pumped, and today it dumped. What's really notable, though, is that we could not even bounce off yesterday's low. So, what exactly happened? Because it says red alert, only 24 to 48 hours. Pause the video, read the title if you want. But it looks like there is an attack which could happen before the markets open on Monday. This headline has now been updated as well. It now reads as US moves to defend partner in case of an attack. Yeah, this looks bad. I wish I could tell you exactly where the market's going to go, but there are jitters out there. So stocks get hit and people are rushing to safety for things like bonds, the dollar, oil, and gold. We're now only 2 points off getting back into fear. This does not look good. I can't pretend like it does. What I can tell you, though, is that we did give you warnings. And the best part about warnings is that if it's just a warning, great. We bought a little bit of cheap insurance. And that's exactly what fearless stock market bulls have been doing. They started hedging for a potential stall in the Fed pivot. But this is really something new we've seen, which is put demand. So people are expecting a potentially big move after ignoring it for months. So now the market's going to face a big test. Volatility had a 16+% day today. It had the Nike swoosh we were talking about yesterday. And this is really important because I've been giving a number of warnings. You can pause the video, but we went through all this, and I'll give you a video at the end which gave you a breakdown for it. We didn't quite get the bearish engulfing candle on QQQ, but I will come back to talk about these in a moment. In terms of Bitcoin being the leading indicator, oh my goodness, did that thing sell off today? So if we go here to a one-day chart and we look at Bitcoin, man, this is looking pretty brutal out there. Let's look at Bitcoin. It's down by 4%. Tagging that 50 DMA or the short-term price. If we move here to Ether, that's right. It fell below the 50 MA. It's now down by 7%. What's so interesting about this is that we've already talked about this previous pattern here, which tells us that if we stop going up, we could go down. And we've already been going sideways. Now we got this nasty shock, which could happen before the market opens on Monday. So what's so notable about this is that the S&P tagged the 50 DMA. That's the first time we've seen that area going all the way back to November here when we really started the rally. Not only did the S&P test it, the NASDAQ tested it, hit that blue line. We moved further down, Bitcoin, Ether, and others did as well. So the market's jittery right now, as these headlines suggest. So what exactly can we do? Well, we talk about the warnings, then we're receptive to that 50 DMA getting tagged. So the next stop is 504, and that's 4% off the high, which means that we're now into dip territory. It could even become a correction, which means we'll go down to 480. So if we look at the heat map for today, whoa, right, what happened? Well, JP Morgan's also pretty red, down by 6% on a sour reaction to earnings. But let's take a second to zoom out here because what goes up hard into earnings can sometimes come down. So in the last 12 months, JP Morgan is still up 42%, which basically just means that it's taking a little bit of steam out of the tank. And went up dramatically. Look at October here, right? Boop, rocket ship higher. And they beat earnings. And the stock still went down and sold off hard below the 50 DMA. Why? Just wasn't enough. Stocks have to crush if they run into earnings. And a lot of stocks have run into earnings. So I think that's a double-edged sword. We got this concern. We got a potential attack going to happen. People are already on edge. They're almost back into fear. And they're buying insurance. So we're seeing a lot of things out there which tell us that we're seeing more than just warnings. We're starting to get that red alert or the confirmation. So if we continue the story here, I'm going to ask you for a huge favor before we go further. If you could please take a second to please consider smashing a thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. Thank you very much ahead of time. The reason why these bank earnings matter is because we're going to be kicking off the thick of earnings next week. So if these charts are going to break down, notably SPY, QQQ, I think Netflix is going to really matter on Thursday to set the tone for big tech. We don't want to forget about that. And if you're someone who doesn't know what you're going to regret more, you want to take a second to pause the video and ask yourself, are you number one or number two? Because the way you act when your emotions are high, you want to really make a plan before you start to get forced to make a plan. And then looking here, S&P is heading for a rough patch as buyback blackouts arrive as we go back into earnings. So this is really important because the Magnificent Seven influence over the S&P has never been greater. So when Netflix kicks it off next week, right here on Thursday, we really want to be mindful of that. Let me leave you with a glimmer of hope here now. So if we go to the S&P, what does this mean? If we're going to get negative follow through, the saying is, if there's measles in the sky, it's time to buy. Well, they're not in the sky yet, at least for this new thing we're hearing about. So what does that mean? It means we want to see what happens into Monday. If we fade into the first half of the week and then Netflix again, if it beats and it drags us higher, that's what I would look for. Netflix has a similar issue here where it's gone hard from 350 to nearly 700. So is it going to have that same sour reaction? We're going to have to likely wait until the end of next week, as I did say before. But here's the most important part. We have these short-term signals like the weekly chart, like the daily chart, which are giving warnings. But as of right now, we have not broken this pattern. That's my glimmer of hope. We're right here near support. It just might not feel like it. We're right on the monthly higher low. If this level breaks, as I noted to you before, then we have to look for roughly 480. But until we lose this level, I have to assume that as of right now, things don't look all that bad. We're getting warnings 100% on the weekly, on the daily, but the monthly chart is not yet broken. If you want more context, I'm going to leave you with a stream this morning where we go through a lot more notes. Otherwise, maybe you want to subscribe and come hang out with me on our next stream. Otherwise, thank you so much for tuning in. I'll see you on the next video.